variety correction. Valuations got stretched. There was tremendous liquidity in the market. You got to remember, prior to the pandemic PPP programs and all the support in printing $4.5 trillion, this was standard volatility. It wasn't uncommon to have the VIX past 30. And we forgot about it. You know, a whole generation of investors forgot or never learned what volatility was. Well, welcome to volatility. And now it's affecting many different sectors with the exception of energy for obvious reasons, but each sector seems to get maligned every second week. And so the whole market's PE is being taken down with the uncertainty around inflation, Ukrainian war. And this has been talked about for weeks now, but there's no safety in saying I'm going to go hide in Walmart, for example. You just lost 20% there. That's because the market's trying to figure out what comes next. Generally, a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true. But you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet, and they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing, and I'm waiting for that to happen because we're getting close to a bottom here.
Okay, so when that happens, any feeling as to what company it could be, Kevin? What sector?
No, it's hard to say. It's generally, it usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing, and that's happened many times before. These are guys that have never seen this kind of a market, so they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down, 1 to 3% a day, and you don't really bottom till you get that flush. Pessimist, it's one more 50 bip hike, and then you have to reverse course and take it back 90 days later. I don't think that's going to happen. The reason I say that is if you look at employment, we're at full employment right now. It's really hard to forecast a recession at full employment. And so we're in a really interesting situation here. It's, for the real pessimists about the economy, they're saying, well, the consumer spent, they're about to roll over. But everybody I talk to that's selling to consumer, including the Target and the Walmart numbers, show that the consumer is still flush with cash. It takes a long time to spend $4.5 trillion. And so each recession is different. And this is a predictive correction in the market. We haven't actually had the bad news yet. We're just predicting it. So we're pulling down valuations and really rapidly across all sectors. There's nowhere really to be safe right now with the exception of energy, because energy prices continue to spike, and the cash flows of oil companies that have fallen out of favor. And even the president didn't like pipelines, et cetera. Well, that turned out to have been a mistake. And now we have these exceptionally high $4.50 to $6 a gallon prices, and consumers are not happy at all. First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know. And nobody knows right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year because we're still at full employment. And so what I don't know is how much of this inflation is real and how much is transitory. Remember, we've never had a global pandemic that's a rolling pandemic. Right now, if I were the Fed, I'd be looking at what's happening in China, which refuses to take Western vaccines and is constantly shutting down cities, millions of people locked in their homes. That is very unproductive. That damages supply chains. You heard it from the CEO of Target saying, this is killing us in terms of forecasting what we need into the back end of the year because our factories are shut down. And that's kind of unique to China. Most countries are willing to accept the abundance of Pfizer and Moderna vaccine, which actually works. The effectiveness of the Chinese vaccine, whatever that's called, is sort of 35%. So if you're only 35% effective, you're going to have rolling pandemics forever. And so I think this has got to get resolved. And I think the leadership of China is probably worried about these images of people throwing themselves out of windows and lowering their dogs by their tether, so that they can do their business on the ground 20 floors down. I mean, the whole thing is crazy. But that's something that's got to get resolved because that supply chain directly infects inflation.
And the $1 trillion wipeout basically from the space. We know how the narrative goes. Bitcoin, Ethereum, Terra Luna, Cardano, Solana, no one was spared. No one was spared. Your thoughts on what's happening in crypto right now?
I think this is actually a maturation process for the crypto market. There's two basic baskets of crypto projects. One, highly speculative tokens, and you could say UST and Luna certainly fit that because they've been repriced dramatically. Highly unlikely in the context of stablecoins will they ever return to their old prices because people have figured out a stablecoin should be stable. And that means it has to be backed by something of asset value. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which look like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto has had a nightmarish correction. And I think that's very good in the sense that it helps separate the wheat from the chaff, or the cream from the milk, if you wish, whatever analogy you want. Because the traditional projects have remained relatively stable. Sure, they've had a correction, but it's not uncommon each year for Bitcoin to give up 50% of its value, and that's certainly been the case here. Ethereum, same thing. And so that's the volatility that will be inherent in crypto until there's policy.
And we're going to talk policy in a bit.
I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed because Ethereum is pretty slow. So we don't know which one of these projects is going to win. Right. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system because I am now accepting payment for goods and services in USDC and very often not converting it back to fiat because I'm simply leaving it in my Circle account and rolling it into these 30-day contracts. In fact, I had a really interesting dialogue with one of my banks last week, and I plan on reading the script at the next crypto conference because it's quite interesting. It really says a lot about the banking system right now. I cannot buy more than a 3% weighting in any mandate of USDC because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So we moved the $7 million out of the account into a USDC account. And within hours, I got a phone call from the bank saying, what happened to that $7 million? Why didn't we get a chance to bid on it? I said, okay, bid on it. Right now, I'm staking it out at 4% for 30 days. Right. They came back, gave me double B corporate credits for 3 years at 3%. And I said, why would I ever do that? You're not competitive. You've got to meet me at 30 days for 4%. And then they sent me all the articles about the correction of Luna. And I said, Luna is not USDC. These banks are now finding themselves getting squeezed because people are figuring out they're not advancing enough into understanding how crypto works. And their clients, I'm just one client, are moving millions of dollars out of their account elsewhere. And I said to him, look, you can bid for this money anytime you want, but you have nothing of value to me if I have to pay 100 basis points less and tie up my money for 3 years and a double B corporate credit. You're not even competitive. You're not even near what I can get. So there you have it.
So and talk